This is the Southside School of Financial Freedom Watch List and Market Report for the week ending February 25th, 2023. Our question this week is, what is a CBDC? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average decreased minus 1.02% on Friday and was down minus 2.99% for the week. The S&P 500 decreased minus 1.05% on Friday and was down minus 2.67% for the week. The Nasdaq decreased minus 1.69% on Friday and was down minus 3.33% for the week. Looking at the week, we can see that there were 4 up finishes versus 8 down finishes for the major indexes. The market was closed on Monday. On Tuesday, all the major indexes finished down. On Wednesday, the Dow Jones Industrial Average and the S&P 500 finished down, while the Nasdaq finished up. On Thursday, all the major indexes finished up. And on Friday, all the major indexes finished down again. New unemployment claims were 192,000. The core personal consumption expenditure price index increased 0.6%. Treasury yields rose after the inflation rate was reported. New home sales jumped to a 10-month high, and it was reported that homeowners have lost $2.3 trillion in value since June. New unemployment claims, core personal consumption expenditure price index increasing, Treasury yields rising, new home sales jumping, and homeowners losing $2.3 trillion in value are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the type 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is a CBDC? A CBDC is a central bank digital currency. It is issued by a central bank like the US Federal Reserve System or the European Central Bank. A CBDC is a liability of the central bank, and it is denominated in the country's currency. For example, a US CBDC would be issued in US dollars. In the case of CBDC, we also need to know that a CBDC is not like Bitcoin or even a cryptocurrency. CBDC is totally centralized and controlled by the central bank. That is, it is controlled by the government. It can be turned on and off by the central bank. Instead of requiring you to pay taxes, the central bank, with the use of CBDC, can just take the tax or any other fee or penalty from you. A CBDC is the opposite of Bitcoin. Many countries are researching and or experimenting with CBDCs. The US has not implemented a CBDC yet, though it is doing research. On the other hand, Nigeria is a country that is fully implementing a CBDC. And they have already placed limits on how much Nigerians can withdraw from the bank. The limitations, of course, has caused financial disruptions and hardships to the citizenry. Do you want the government to be able to control your access to your money? Do you want the government to be able to turn on and off your account? Do you want the government to know what purchases you've made and where you shop? Do you want the government to know which stocks you've bought? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you absolutely nothing about the US financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at SouthsideSchoolOfFinancialFreedom.com. Here is a Southside trading watch list from the week ending February 25th, 2023. The strongest performer on the list this week was United States Oil Fund, LP, ticker symbol USO. It's in the second column. It was up 1.08% on Friday, but only increased 0.12% for the week. The fund seeks to reflect the performance of spot price of West Texas Intermediate light sweet crude oil by investing in futures contracts for light sweet crude oil, other types of crude oil, diesel, heating oil, gasoline, natural gas, and other petroleum-based fuels. Looking at a summary of results, you can see that USO has decreased minus 4.29% year to date. I did not trade or generate cash flow from USO this week. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comment section. Are you willing to share your strategy? The Southside portfolio cash flow system is outperforming the S&P 500 ETF SPY. The Southside portfolio is up 21.9% versus 3.65% up for SPY, a difference of 18.25%. The Southside is beating SPY by more than 18%. The cash flow generated by the Southside cash flow system for this week was 1.95% of the portfolio account value. The account value changed by minus 2.91%. Meanwhile, the S&P 500 ETF SPY changed by minus 2.67%. Bitcoin watch. Bitcoin lost 6.17% this past week, but continues to be in a bear market. It is down minus 60, more than 66% from its all-time high achieved in November 2021. I sold option contracts on one position this week. It was a put that ranged from $0.00 to $41.35. You can get more details, including the total dollar amount of cash flow for the week, on the website Southside School of Financial Freedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists, levels 1, 2, and 3. The videos are also arranged by subject matter. In the meanwhile, please like, share, and subscribe.